Everybody, I'm Giuseppe Basile and welcome to this new midweek video review. It comes just with um, 1 day later here. In this presentation, I'm gonna also give you some information and a look on the news in 2018. So thank you very much for spending your time with me on this video. At the end of the video, sorry, in the second part of this video, we'll start the midweek video review as well. So this is part of the FIPStalk Analysis and Trading Service, which is a service that I launched 2 weeks ago. It's in beta, and in January we're gonna see the service fully developed, and I'm gonna give you a few news here what's gonna happen in 2018. So stay tuned. If you have already subscribed, stay in the service. You're gonna get much more value of what you have got so far. When it comes to the review, you know that past performance is not indicative of future results. This information is merely provided for your general information. The opinions are expressed and do not take into account your particular individual investment objectives and situation and financial situation. So as usual, this is the usual disclaimer. Trading is risky. FIPStalker Trading, myself, Giuseppe Basile, FIPStalker Consulting Inc. and FX Trade will not be responsible for any losses incurred on investments made by readers. All right, now that we have gone through this, before I get into the analysis, I want to share with you what's new in 2018. What you have seen in the room so far, it's really nothing. I mean, for the subscription price, you're going to get way more than what you got so far. So what is the new year going to bring to the Winning with Algo's FIPStalker community? Well, new systems and setups on the smaller time frames, 45 minutes, 15 minutes, and 5 minutes to enter early in large potential trends. That's what we do. That's where the big money is. Quick video analysis on specific opportunities that are forming in the market. So sometimes, and this will be on top of the two long reviews that I provide to the subscribers twice a week on Sundays, and that's the weekend review, and on Wednesdays, or in this case Thursday, and that would be the midweek review, which is the review you're going to get after this first part. I will also have some jump on my screen impromptu short webinars in the morning or during the day, which will also be posted in the room for those people who are sleeping, who are not available to jump on the live webinar. And we're gonna review some charts and see what's going on at that moment in the market. I have some screens and Forex pair screener that run all the time, and you're going to identify opportunities hopefully before the fact. There will be also discussion of what I'm trading at the moment and what I see in the markets, and this would be multiple times a week. So I'll show some of the trade I take and why I take them. I show how I add to the current trades, and that's very important to build profits. There'll be also 15 minutes small videos which I call FIPStalker Pills, and that will be on some aspect of trading. They'll be posted in the room, but they will also be posted on the website and on my YouTube channel. And finally, there will be longer educational pieces with a specific focus, for example, risk management or money management or specific entry techniques and so on. And this is something that goes on top of the FIPStalker Methods Coaching Program. Okay, but it's not all. There is more. I will keep working with current students of the fifth session of the FIPStalker Methods Coaching Program, which we have not yet completed. So if you have subscribed to that session, we need to cover our few remaining modules, and of course, like my policy for the coaching program offered so far, anybody who has joined a previous coaching program, a previous session, can join for free, and I'm always inviting all the previous students as well. Okay, we'll have new students of the online FIPStalker Methods Coaching Program, which is the new format of the coaching program going forward. It's going to be an 18-24 months program, and that's only for serious traders. If you're not serious about trading, that's not for you. And if you're not sure about it, just contact me and let's have a call, and we can discuss whether that method is for you. And you can find a lot of information about this on the website as well. I will also introduce a new FIPS-Talker Method Express. This is going to be a 12 weeks of intensive coaching with 2 live webinars per week for students who want to reach quick results. Okay, so again, this is going to be priced in a different way. There's much more of my time that goes into it. I mean, any time that I spend with students, I gladly do that, but I subtract that to my own trading. And if there are opportunities to add to existing trends or anything else, I will not be able to do that. So this is going to come a little bit more. It's going to be more expensive but you're going to get results very quickly in 3 to 6 months. Okay, so the program is 3 months, and then there'll be a follow-up after that. I will also create this year brand new trainings with undisclosed information on timing of dump and smart money. And that's something that many of my students have been asking for. I didn't have time to prepare that. It's going to be a separate training. I will also do training on risk management, money management, and trading multiples, really how you multiply your gains and make a real bang in trading. Okay, so these are all new techniques which are not part of the FIPS-Talker Method Express or the FIPS-Talker Method Coaching Program. And by the way, if you take the FIPS-Talker Methods Coaching Program, you will learn a lot of techniques and you can be profitable and consistent. This is something that adds on top of that, okay, but it's not part of the FIPS-Talker Method Express. And actually, these brand new trainings will have as a requirement that you take the FIPS-Talker Method Express because they build on top of it. Okay, that's very important. Now, are you still on the sidelines? What are you waiting for? Because I provide a lot of information for free in my 1-month package. And if you have not taken advantage of that, I don't understand why you're not doing it. There's no risk for you. Just try it. And if you don't like it, if it's not helping you, that's okay. Nobody gets hurt. And, I'm sure you have learned a lot. I mean, I have a lot of people taking my 6 hours Winning with Algos course, and they say, there's so much information in there. And I really loved that course. So, how do you do that? If you're really tired of losing money and you have good proposition for next year, just come to my website, the FIPS-Talker Trading, FIPStalkertrading.com, and in the on the top pages, on the top of the pages, you will find this banner here. Just press on it and register for the 1-month free package. You get one ebook. You get video course that I was mentioning before, 6 hours video course. People love it. People really like the information. It changes the way they think about trading. And then you can jump on the signal service and analysis and trading service that I provide for 1 month. No risk. It's free for you. You don't have to register. You don't have to pay. You don't have to go on PayPal. You don't have to do anything. You just send me an email and say, I want to try the analysis and trading system and trading signal. I'll be happy to have you there. Now, if you know my work and you're already, have seen my analysis and have seen my premium webinars, and you have seen also all the other material I provide, the 10 steps of successful trading and so on, and you believe that what I do can add value to your trading, and actually it has added value to the trading of many people. I have successful traders like Pantelis, Craig, Ray, Gary, Alp, many students that I've helped in the past. And actually, the most committed ones are always the one who win in the end. So if you know what I do, come to the new session of the online FIPS-Talker Methods coaching program. Drop me an email. I'm offering a restricted price, and this expires tomorrow, Friday 22nd, and then I'll have a Christmas offer, which is more expensive than this. So if you really wanna, if you're really committed and you wanna get into it, just let me know. And this is my flagship coaching method now at the 6th session. And I've been helping almost 100 people with this program, and the most committed ones, Nicola, Brian, to mention others who are actually making good money, have had success with this. So go to fibstalkertraining.com, go to the Fibstalker method coaching program, and if you drop me an email, I'll give you a restricted offer. Note that this program is not for everybody. This is for committed people, and also you will need to sign an NDA, non-disclosure agreement, when you if you decide to participate. Okay, so it's for committed traders. There's a lot of proprietary information. You're not allowed to disclose it, but it's going to serve you well for forever. And before I get there, I want to review some of the testimonials here of people who, in the years, have been working with Gary. Gary really subscribed to the first coaching program ever, and he actually paid for it with the newsletter. So he made money with a measured move on the newsletter, and traded on the Dow and DAX, and he paid for the class, and that was the first session. Alp has been another successful trader. 5 days in a row profitable, 20 profitable trade, 6 losers, 84% winning rate. There are many people who have had success. Peter is another person who has included in his method has included Fibstalker methods concepts. We have Craig, we have Pantelis, and is my good friend Dale Pinkert who has discovered my work on Twitter back in 2014. He says, I believe in Giuseppe's great work, and that everyone who learns from the Fibstalker has value for the rest of their training lifetime. And many of my students are actually demonstrating that. Another good example, and now a friend, is Benjamin Charbonneau, who actually started from nothing, not knowing anything about market, and he became a trader for a prominent broker in Canada. So, this is my legacy. This is what I've done in the last 3 years. I have people having very good result. I want to mention here another 2 example. Among my testimonials, I have people like Matteo, who in one profitable month, 15 R, and that's not really a lot. I had people making 100% in a month, believe it or not, 47 R in a month. Okay, and that was last year as well. So this is the kind of results you can get. I'm not saying that everybody's going to get these results, but if you put effort into it, and then you keep refining, and I'll show you ways to multiply your returns as well. So before I get into the analysis, sorry, this has been longer than I initially thought. My apologies for this, but thanks for staying with me. And I want to wish you and your loved ones a Merry Christmas and Happy New Year. Hoping that your holidays and all your days will be filled with joy and will be filled with pips and gains next year as well. Okay, so thanks for listening, and now let's get into the review and analysis. I'll start from the SP 500. The SP 500 has continued its move higher, and here the Santa rally might be close to an end. Now, not saying that this market is going to reverse tomorrow or is going to reverse soon, but we know that this market is well above that 2500 that I've been mentioning since back October 2015. The 2500 level, and actually this week I've been sorry, last week I've been on phase on Forex Analytics, for an interview with Dale Pinkert, and I show also a recent research I've done showing that we are basically kind of um, replicating what we have seen in 1987. I'm not going to say that I don't think that we're going to get a dramatic event tomorrow at the beginning of the year. But in that occasion, the market also went to the first target, went above the first target, and actually went 54% above that level. Okay, so if you so before we saw that dramatic event, but this is an extended market by all means, and extended market can become even more extended, but eventually we are going to get a correction, and whether it's a dramatic event or a strong or a continued correction like we saw in the past, we know where this market is likely to go. We're going to keep tracing on a larger time frame the highs to new highs, and that's what we're going to use to project where the market might stop and where the smart money might start looking at longs if we get a dramatic event. This market could continue higher for weeks and months, but you always have to be in the lookout for a dramatic event. And if we get a dramatic event, we're going to get a shakeout in all the markets. Okay, so make sure you always keep your stops. Don't trade without stops. That's not the way we trade at FibStalker trading. All right, so let's look at Silver, you will remember, as is within a sequence of measure moves shorts. The inner measure move here has found support. This is a weekly time frame. We mentioned this last week as well. We know that this market has found support that first target, that is profit taking, and what I mentioned is that this market could trade an extension short. So that's what I'm looking at here, and that extension short, as you can see, has traded already, and it has started pushing this price lower. Now, of course, for this market to keep moving lower, we need two things. First of all, we need to work out this dump money area here, and then what we need is that we need a collaborating dollar index, and the dollar index has been under pressure in the last week. In fact, a couple of trades did not work because of that, and one had one unit of risk in one unit of risk of loss, and the other one we closed at a break even because it was a risk-free trade. Okay, so we use risk-free trading a lot in the room, in our trading. So this market might continue higher if that happens. Remember that we have a weekly dump money area here, so that market, that price might not really go up a lot. So I'm going to use the 50% retrace here, just in case this market continues higher. Okay, and but this 50%, if the market gets that, should be pretty solid, because that would correspond also to a weekly level. Again, we need a collaborating dollar index, and the reason why it has been particularly difficult trading in the last few weeks is because the dollar index has not made its mind yet, but there'll be plenty of opportunities. So you know, and and silver and gold, which I'm going to review now, could also offer these opportunities. Gold is already trading at that 50% level. It might move a little bit higher as well. As you can see here, it's actually enjoying the support from dump money here, and the market could continue higher into the top part of this area, around 1277. So, shorts are going to be a little bit more difficult here. We need to work all this area of support before the market can start moving lower. Dollar index, very, very important, very loosey and unpleasant market. Basically, the dump money, daily dump money here has kicked in, and now we are in a situation where we have weekly dump money short, area. Daily dump money is short, and this is putting pressure on this market. Now, will this market continue lower? That's something that we need to assess. There's this 50% here, 92.55, that is still there. At this point, it seems reasonable, and that this level is going to give up, and in that case you're going to see even move even lower in this market into 92, and that will really tell the full story. As I mentioned in the past, I never fully committed on one scenario or the other, and the reason is we are in a situation where all the two scenarios here can actually still happen, and unfortunately, until this market exits this range here, it's not going to be easy to make money, and that's going to affect also the other pairs. But eventually, this is going to end, and and when that ends, it's going to be much easier to make money on all the majors and also the other markets. US dollar, Singapore dollar behaving the same way and actually anticipating what we're seeing in the dollar. This market has been weaker than the dollar. I was hoping for a break above this level and a double bottom here, but that never happened. And as you can see here, the dump money on the daily is very strong, and when this scenario do not take place, we just need to quickly change our mind and take the opposite trade. In this case, there was a setup, dump money setup here, and that's what we need to synchronize as with. So whenever you use aggressive risk management like the risk-free trading and other techniques, it's easy to get these trades into these trades, because even if the market continues higher, it's easy to get a risk-free trade here. Okay, and that's the overall thinking that you always have to have. We try to identify precisely levels, and that's what we trade. We trade with. That's very important, because by using the Fibstalker methods to identify the beginning of a trend, we can get into a trend and then try to add on the trend, and that's where the real money is in trading. Okay, so the Fibstalker method still and levels are still very important, because they allow us to enter early in a trend. So let's review the main markets here, starting from the euro dollar. The euro dollar obviously has continued higher, and it's trading a 50% long. That has been the area that has been participated, that was never broken. So we are on top of this weekly dump money area. We were looking for a different scenario. If the dollar index had behaved, probably there would have been a retest of this area, but the market respected the 50% and is moving higher. Now it has also broken the back of the bears here, which means that now the first target at 120.57 is confirmed, and that's what we have to work here on the euro dollar. Okay, so it is always very important that whenever we provide an analysis with two scenarios open, the two scenarios have to be traded as well. And it is ideal that you have a hedging account rather than a netting account, because if you have an hedging account, you can trade the short, and at the same time you can trade the longs. There's two different positions, and if the short are stopped out at break-even or with a gain, we stopped, for example, this move lower was stopped out with a gain of 2.5 unit of risk. Then if that short is actually stopped out, you can still play and still have a position long. So it's very important to trade but the direction of the market. Okay, so pound versus US dollar. This market, on the other hand, has respected the 50% level. It has initially broken that level, but then it's respecting it. The point is that this market is on top of weekly dump money area, and if the dollar index keeps weakening, then this is going to keep offering support, and eventually that level will be pierced. But that level has been pierced already, and what is trading in this market is the opposing 50% long. Okay, so we always have to keep these levels on our charts. We always have to keep these levels on our charts because these levels are real and they can find a real support around a small, very small time frame. You can get, a reasonable entry and generate a risk-free trade, which is really our job as traders. Okay, so the moment is this being compressed by two areas here. One is a Fib Stalker area, the 34.25 short, and the other is the dump money long below current prices at 133. So as you know, when we have these kind of markets, we have to be more careful. $1 US dollar has attempted an initial correction, and then it actually continued. It actually continued higher here, so this is a confirmation that although this market has never tested the value 50% level, the weakness in the dollar index actually pushing this market higher. So let's wait for this price to load here. Okay, and so what happened here? What are we seeing here? It's a continuation higher. I was looking for this extension to come into play. That extension has come into play for New Zealand dollar, US dollar, and I mentioned that in the room as well. So I was looking for this kind of behavior here, but this market was much stronger, and actually it has traded a higher anchor, which is this anchor here. And this anchor, it's not just a random anchor. I mean, it's always the sequence of measure move. This market is very technical, being a major. He traded the 75.22. And then he came back to trade a full 50% retrace, which is not common, but it also had support on the 4-hour time frame of the dump money here, and then the market just propelled higher into extensions, and that's the anchor that came into play. Okay, so very technical market. If it's not the measure move on the larger time frame, there's always a sequence in the smaller time frame, and that's where the market has traded. Now, when you come and study with me in the Fib Stalking Methods coaching program, I also show you how to time using the Fib Stalking time, which is a proprietary technique. And you can time also as a 15 breakout and other techniques. The point is that the Fib Stalking timing technique gives you the more guarantee that the smart money on the larger time frame here it's stronger than the counter trend. So that's the main key there. So what we're looking for this market, there are targets above on the 4-hour time frame, 127.21 and 127.65, and that's where we're likely going to see this market. New Zealand dollar, US dollar. It's actually traded at that level, as I mentioned before, and there was an extension and that came into play. There is support from dump money here. Everything is playing according to textbooks here. And now this week in the room has been a pretty slow weekend. We also had dramatic event and a death in our extended family, and so I really could not dedicate a lot of time. But it's also, a period of time that I don't like to trade a lot. I like to leave, have close all the positions and let, just the market go and make sure that we can get into our Christmas festivities. Of course, I mean, it's going to be a little bit different for us, but without additional, clutter and knowing that we don't have any position open. So that's my view. But I know some of you have participated at this level. I have not participated at this level, and there are targets above now, and this market has the potential to get into 71.33 and 71.70 area here. All right. So US dollar Swiss franc has been pretty, loosey behavior here, at least at the beginning of the week. It went through retest this area a number of times of a freeze trade, stop out, freeze trade, and now it's it's attempting that move higher again. We needed a collaborating dollar index for these markets to strongly propel higher here, and this kind of performance was not what I was anticipating when I recommended the risk-free trade at the beginning of the week. And some of you have taken that trade. Congrats. I mean, it was a risk-free trade. So nothing to be worried about. Of course, if the dollar index would have continued higher, this trade would have done here, and that's the reason why we always have to protect ourselves. Now, as you can see here, this 50% short initially has not held, confirming the first target here, but now is holding. So and this market is dripping with lower lows more and more into this area. So we could also see, if test is not successful here, we could also see this market continuing lower. The US Canadian dollar also has done that move that we are waiting for some time, and this market is working out this support area from that money. When that support money is gone, if the dollar index will continue lower, we're gonna see a continuation lower in this market as well, and this could be next year, offer great opportunities here next year, and even in the last year, in the last week of the month. So those opportunities will need to be taken on the hourly, 4-hour time frame, if that's what happens. Of course, the daily time frame, we need to work out this 90. We did the moving average, which corresponds to this weekly 10 AMA here. So when that flattens out and starts moving lower, that's going to be when the dump money here will allow this market to move lower. The market got closer to that 129.28, and in fact the high was 129.20. Now in this very large time frame, I will consider that level as tested. So the reason why we could be seeing this move lower is because smart money is also participating to this largest short here, and that would be one of the reasons we saw that strong move lower. Dollar index continues lower. We're going to see this market much lower. There's a first target of this inner move, and that's the 166.65, and then there is the largest. Sorry, that's the sorry, I have to say that's the let's see, the 166.65 is the target of the larger measure move here, and I just want to actually want to highlight that. So, and that would be the 1943, and this inner measure move as a target even below. That's 116.65. Okay, so this is a lot of pips. I mean, it's 127.40 to 119.43. Talking about 800 pips here, which could could run down very quickly here, and And when this support ends, behaving as a support, that's what we're gonna see in this market. Of course, because of the situation of the index, which is unclear, it's very difficult to anticipate. We would normally anticipate these trades here, but we're going to get a retracement on the weekly or 4-hour and daily time frames as well. US dollar Japanese yen, on the other hand, has been stronger, although suffering, the weakness of the dollar. But despite the weakness, this market has done very, very well. Very technical market. We always have to respect these levels. And but again, I mean, the situation in the dollar index adds additional uncertainty here. Sometimes it's more difficult to take these trades. That's why it's good to go on the smaller time frame and enter anyway and generate a risk-free trade as soon as possible. So going forward here now, we have a market that actually could retrace a full 50% here on the daily and bringing that price into the dump money area here. That should initially sustain price. You're going to see whether that price keeps be sustained into the 1640, which should be the first target of this measure move, and helping price into that 124, which is the largest target. Australian dollar, Canadian dollar has followed up and mediating between the strength in the Australian dollar and the strength in the Canadian dollar that actually has pushed this price lower recently here. When we update this measure move, you can see that this extension needs to be respected at all times, needs to be traced and updated, and whenever a fib stalker area is tested, you need to act and take note of it. So I don't trace this before the fact just for fun. I trace this before the fact because they usually hold, and although I have not updated this, those of you who use the methods know that they have to update them, and we have seen price bouncing rather than 97.75. And the question now, and there is also a dump money area, the question now is whether this is going to be retested or the market just continues higher. And the Australian dollar is strong, the Canadian is also strong, and the point here is that we need to understand which one of the two is going to be the strongest. When we look at the largest sequence of measure move here, we know that the short here has held. So we need to be very, very careful here. The market might have seen the highs here, basically showing that the Canadian dollar is much stronger than the Australian dollar. Okay, the Canadian dollar Japanese yen is one of the trade we had, and we had a risk-free trade, and we had a stop at 88.51 above this highs here. The market generated a risk-free trade and then retraced on that strength of the Canadian dollar. If that strength continues, we might see this price moving higher. But as you can see, the fib stalker levels are always technical and important here. And again, this is all the byproduct of a dollar index is still moving laterally. When we get some more clarity on that, we will be able to bring these price to swing targets. Now, even you always have to think that even if you're not able to bring price to swing targets, these trades are still very valuable. Because we're talking about here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. And even if you just took the inner 50% is 1, 2, 3, 4, 5 days on a 4-hour, 1 hour, 15 minutes. This is a great trend to trade. Okay, so a few days, it's a great trend to trade. So what's next for this market? I mean, if Canadian strength continues, we're going to see this market reversing completely here. At the moment, it's still holding that 85.18, but to have actually taken out these levels as well. Okay, so you know, although the Canadian dollar is moving laterally, this move could not be immediately or easily anticipated. Sometimes, you know, we have to take multiple positions and take profits out just to keep some profits if we get reversals like this, and that can happen anytime. So US dollars, Singapore dollar, we have reviewed that already. Let me continue with you. Euro, Japanese yen here, same behavior. Japanese yen strong, euro strong. Um, and this of course has reversed completely the case for this Euro Japanese yen. You remember that at the beginning of the week I was mentioning, well, we could be in a situation where, you know, we're going to get a crossover. These moving averages is actually turning, and that's the kind of thing we're looking at, right? But then, you know, things can change very quickly, and the dollar index going one direction or the other can completely change the scenario. Now we have to say though that this market here had already broke this level here. So I already mentioned that yes, this market could turn, but we always have to keep in mind that the larger 50% was not capable of holding this price in. Okay, so at this point, if things continues like that, um, you know, we could see a continued move higher. So here, dump money could play an important role. I'm going to leave you with this trace that you have to update going forward. If the market comes back into the extension here, this would be a good previous highs level with support from dump money and smart money, but the market could also have a shallower retrace here, in which case that's what you're gonna get, the 133.90 to 134 level rather than the 133.80. Okay, so these are the two levels we have to keep in mind, either the 134 or the 133.80. It's a very close area, so you can use that for stops. Pound versus euro versus pound here has traded the larger dump money level here on the weekly, which has pushed this price higher, and it's now kind of in a position of challenging again that 90 90-30 area here, and that's what we are seeing at the moment in this market. So if we get a throwback here, you know, this could encounter support from dump money area here, but basically, you know, the first important resistance now it's back into that 90-30 level as I mentioned, and that would be this area here. Okay, so ideally we want to see a pullback and then a move higher into 90-30. That's what we're going to look at. Of course, you know, there'll be no activity on the room. I'll only do the analysis in the coming days. So, you know, any move higher here, if you trade, you can take that. But we're really gonna start with a new slate next year. Euro Australian dollar has moved strongly lower, and it has bounced, and it went to test. I've always mentioned an extension here with this market extending the downside. The extensions are the most reliable source of opportunity here, and that's what we that's what we look for. But as you can see here, there was more strength, and this market went to trade the full 50% of the previous previous measure move. The euro, New Zealand dollar also behaved in a similar fashion here. You know, this market have bounced from daily area, dump money area here. That could be retested again, and after that if the Australian dollar is stronger than the euro here, we could see a continuation lower. This 50% here gives a nice targets here that should bring price into that 151 area if this continues lower. So any other test or dump money here start offering resistance, we could see a continuation lower if you're short in this market. Euro, New Zealand dollar was a little bit we were a bit early in this trade, and the the reason for the failure here is mainly the behavior of the euro and dollar index. The assumption was that the dollar index would continue higher, but that was not the case, and we were stopped out. Full risk here, it's not a big deal. You know, if you are experienced and smart enough, you can always you know, you can always edge, and if you have an edging account, you can always edge this move with entry on a smaller time frame here, then more than make for the 1 hour loss. So that's one of the techniques I'm gonna show you, and one of the ways you can you know, you can get even a gain from something going against you. Obviously, you know, it's not easy to show these techniques live in the trading room, but we'll have some webinars, and we will look at ways of doing that, so we do not have losses. We don't show losses for trades like that. And now for this market, we have the same situation, a bounce from the daily here, and you know, this market could continue lower here. There is the potential for that, and we will reevaluate this market, all these markets at the beginning of the year. Okay, the last two markets in this video, and I'm not going to review the other markets in this review for reason that, you know, if you're trading this period, just stick with the main. There's no need to spend time trading. It's good to spend time with family and friends in this period of the time, because there'll be always time to trade. As a dear friend of mine, Dale Pinkert, always says, don't count only your pips and your money, count your blessings as well. I think that's it's a great quote there, and it's important that you know, we spend the right time on the right things, and value all good we have from life. We just don't spend time trading and trying to make more money. So this market here has found resistance from dump money here on the daily time frame. There's also support now on the weekly time frame. So this market might move in this area between 172, 173, and 174.80 for some time. This might buy us some time. We could actually see even a bounce in this market and then trade the actual move lower. So we'll see if that's the case. This level is strong. This could cause a strong bounce there. And finally, I'm reviewing the pound versus New Zealand dollar, and this market has been weaker than the euro. The reason for that is the pound has respected the 50% level. The euro has not respected that 50% level. But as you can see, you know, here, whenever we have these kind of extensions on top of this 90 day within moving average here, there's always a struggle. There's a bounce. Dump money doesn't want the market to go down. Dump money here and smart money are pushing that down again, and usually we get 1-2 bounces and then we get the break. Okay, so that's the way. That's the reason why we need to keep in mind these important levels, important areas where dump money might participate. Smart money is really usually going to win, not always. And if we get another test of 92.50, then we're going to trade this on the downside. All right. So this is it for today. I want to wish you and your loved ones again Merry Christmas and Happy New Year. I hope that your holidays and all your days will be filled with joy. And next year, your account will be filled with money. And if you need help, drop me an email. I will be starting a new session of the online Flip Stalker Methods coaching program. That's the um, sixth session. I have a restricted offer for anybody who wants to participate and bring that trading to higher levels this year. And I will have a number of no's. And if you're not yet ready to commit, and still on the sidelines, you can try my free package, flipstalkertraining.com, offering the ebook, 6-hour video course, and a 1 month trial of Signal service. And the Signal service is going to see a lot of no's and this year. So the community is really gonna grow, and they're gonna bring in different methods, different systems, different time frames as well. Of course, the main focus will always be on the Flipstalker methods. Okay, that's the main way we look at the markets, and the only way I know that we are able to anticipate strong area of support and resistance, which do not coincide with the common areas of support and resistance. Okay, so thank you very much again. Have a great Christmas with your loved ones, and see you next year. Bye bye now.